The management of NSDL, a new kid on the block, so to speak. Vijay Chandok, MD and CEO, is speaking to NDTV Profit. Listen in.
I think the retail investors must be enjoying it because 13 to 14% of gains on the table for them after the IPO is something. What's your first take on it, actually?
No, I see this whole listing process as ensuring that the regulatory direction has been met in a time-bound manner. We are very happy about the fact that we've been able to do that. We are also very happy get a feeling of immense responsibility as now that we are listed. Our number of shareholders have expanded.
10 lakhs now?
We have more than 1 million shareholders, which means that the trust and the responsibility placed on us is gone manifold, and that's what I take away from this listing exercise.
Take us through the business operations, right? When you are in the capital markets, and the perception is that when transactions come down because of the kind of regulatory pressures or curbs are coming in, capital market entities do get impacted because of that. But my understanding is that you're much more diversified in that. How is it actually?
I think that's a great question and gives me an opportunity to explain to you what is our business model. So if you look at our business model, you can broadly divide them into two categories, right? Category A, what we call revenues which are recurring in nature, which is approximately 42%, and part B, which is revenues which are non-recurring or transactional in nature, which is approximately 58%. So I'll take you through what are the components, and that itself will be quite self-explanatory on the linkages with the capital markets. When it comes to the recurring revenue, basically is custody fee from listed companies, custody fee which is from unlisted companies. So as you can know that these are already contracted and these are regular in nature, so they tend to come on an annual basis, and that's why they are called recurring. That's 42%. The second component is the part B, which is 58%, which is transactional. I'll just read out or spell out what are those transactional revenues. One is you have e-AGMs, e-voting, and CAS, consolidated account statements, which is a very popular proposition with our investors. Then you have the settlement fees, which is linked with the debits into their accounts when you sell a share. Then you have pledges, then fees arising out of corporate actions, and joining fees. So these 7 components stack up to approximately 58%. So as you can notice, there are certain parts of these 7 and 9 components which have a reasonable, recurring, sort of an nature. Though technically they may not all be classified as recurring. And however, I think there are certain components which have a dependency on market, like settlements. So for us, when cash markets improve, certainly it has an extra play. When markets are good, there are more IPOs, so that tends to amplify revenues on corporate actions. So there are certain components of fees which get impacted by favorable market conditions a little more.
For an investor, then it becomes easier for them to look at the kind of growth that you've been doing. You've been growing at CAGR of 25 to 30% every year. Is that the kind of growth that you can look at?
So let me tell you the more precise numbers. Over the last 3 years, if you look at our revenue growth has been in the ballpark of around 19%. Our PAT growth has been I'm talking about CAGR numbers, has been in the ballpark of about 21%. This is come at a point in time when capital markets have done extremely well. I've also already explained to you what is the nature of our business. Given that nature of the business, given the kind of growth that we've seen in the past, while we are not giving out any guidances very clearly, I think it's important to say that there is a secular nature that has been demonstrated in the past, although past is no guarantee of what's going to happen in the future. We are a player which has got a fair component of revenue, which has a component of recurring. The other components have a nature that I have already explained. And at the same time, it's important to understand that we are a capital markets play. So there are certain parts which will play out based on the market cycles. But within that cyclical nature, there is a reasonable secular or a structural opportunity which sort of kicks in. So clearly, what has happened in the past has happened with a certain GDP growth rate, certain capital markets growth rate. What will happen in the future will probably be again linked with what happens to capital markets and what happens to the GDP growth rate.
Was that a conscious decision not to go aggressively again for the demat accounts and others user base, as compared to your peer, which was very aggressive in adding them?
So first and foremost, it's important to understand that whatever is added into our accounts is not added by the depositories, right? Yes. It is added by the partners, right? So what's important, therefore, is to identify the kind of partners or what the depository does is sort of connects with the partners. What plays out is a component of two things. What really is happening in the capital markets, because number of accounts, number of investors that are coming depends to a large extent what is the mood in the markets, the nature of the markets at that point in time. And it is also to do with the specific strategy of the market player, their own capabilities, their own skills. It so happened that in the phase of the last few years, the partners that we have played out with or we have partnered with have had a certain period of lower growth. The partners that competition has had a period of higher growth, which has led to more number of accounts. But having said that, I just want to bring you to a point that the whole narrative on number of accounts, while I do consider them as important, to consider that as the only point that is important from a depository
it depends upon how active they are actually.
Yeah, stretching the narrative a little too much, because it's important to note that custody value, when you look at custody value, you will notice that even on the retail side, we enjoy a market share of close to about 68%, 67 to 68% range market share in custody value. And there are several other components of the business like unlisted, like on the FPI side, where we have a very, very strong market share. On the debt side, and all of these areas, we have a very strong market share. So we are a player which is straddling all components of capital markets.
You're primarily a tech platform, and you are expanding to adjacencies as well in that sense. Which are the big ones which you're going to focus over the next 5 to 10 years? Because for you, it's more of an infra play which is there over a period of time. So which are the ones which you're going to focus on?
See, our core services have been depository. And through the depository services, we have over time expanded them based on how the regulations have played out into certain additional products beyond equities. Debt, for instance, some InvITs and REITs, for instance, and so on. So our future is largely linked with the mission and the aspiration for nation building in capital markets. And we've been playing that role by bringing digital services, bringing trust, bringing regulation, putting regulations to work with our partners, and ensuring that customer education is brought out in a very big way, so that the right, in a responsible way, people are able to invest and grow in a sustainable manner. We'll continue to pursue that agenda and continue to add adjacencies and new products that the regulatory landscape offers us. And we will do it definitely on a priority. Having said that, the other aspect of our growth is what we call value-added services. And those have gone on to become important parts of revenue. So these are typically arisen as a consequence of offering core services. Let me give you a few examples. For instance, when COVID happened, people could not meet each other face to face. We brought out this whole proposition of e-AGMs. Today, e-AGM, we enjoy a very strong market share. It has become virtually the way in which most companies are conducting meetings. It has ensured that an investor, wherever he may be located, is able to participate, get his voice felt, and then at the same time, companies, they are able to conduct AGMs in a timely manner, in a manner that has brought down costs. So it's a win-win for every player in the market. Recently, we brought out a blockchain-based model in the debt capital markets. So it's based on the DLT technology, the distributed ledger technology, which is meant for covenant monitoring. Everyone in the nation has been talking about importance of deepening capital markets. I think it is our effort in that direction, where the issuer of the debt issues debt, and then these are registered onto the blockchain on the platform, DLT platform. Then you have trustees which are also registered, and the covenant monitoring happens on a quarterly basis based on what has been stipulated for that particular debt issuance, so that investors are able to get an immutable access to the way in which the issuer is actually behaving beyond the credit rating. So it just gives more information at the hands of a potential investor or an existing investor, so that he's able to take a more informed decision with respect to his investments, and over time, help in deepening markets. So these are some examples of value-added services that we have brought, and we have seen that these are situational. You have a product, you engage with the customer. There's a technology which is evolving. Our effort as a management team is to identify this 3 disparate dots, put it together, and then bring out the product. And we'll continue to do